Now, as our website continues to evolve and expand, we always move more and more into the world of modern technology, and many of our clients are always asking us why we're still sending paper statements. And the idea of going paperless is definitely on the table, but you're going to have to brace yourselves, because before that happens, a lot more information is going to be added to those statements before we go paperless. Now, in an effort to provide more transparency to the clients, the financial services industry over the last few years has been rolling out the CRM2 initiative. And the purpose for this program is to help clients better understand their investment accounts. Now, if you remember back in July of 2014, information on how to assess risk, as well as advising of fees and charges, were added to those statements. And we talked about that last year. And at the end of the year this year, they're going to be adding book values to your statements. So I'm going to talk to you about that a little bit later. Then December 2016, we're going to be adding dealer compensation, trailer commissions, investment performance, and personal returns as well. But I think we'll deal with that part of it next year at this time. Now, I do believe that providing this information for the statements is a good idea, but I think that sometimes initially it can cause a lot more confusion than clarity for clients, mainly because of the order that things are being added to the statements. Myself, I would have preferred to see net invested added before MERs and book values, but I'm sure you know they didn't ask me what I thought. So last year, as I said, we did the presentation on MERs and fees and what they cover. So this year I'd like to just kind of give you an overview of what book values are and what they exactly mean to you. Now, as I said, they're going to be added to the statements this year, so I think it's important that you understand what they mean. Now, book value is actually a number that's used to calculate capital gains for tax purposes, and that's basically it. It's actually irrelevant when you talk about RSPs or RIF or TFSA accounts, because there's no tax reporting on those types of accounts. And book value is actually the amount that you've contributed to the plan, plus the investments or distributions minus any withdrawals. And the distributions come in many forms, such as earnings, interest, capital gains, and other income such as dividends from securities within a mutual fund. Book value is not what you paid for the investment. So therefore, using book value as a number for judging your performance is probably not going to be the best idea. Since most of the investments we use include dividends to reduce risk, book value is usually a much higher number than you actually net invested. And without fully understanding this, you might underestimate how much you've actually earned on that investment. A much more useful number for calculating how much you've actually earned is the net invested, because that number includes all your deposits minus the withdrawals. So in other words, exactly how much you've invested. And the mathematics for it is very simple. You just simply subtract the net invested from the amount you currently have in your account, and you know exactly how much you've earned. Now, net investeds, as I said before, are not going to be included on the statements until 2017, but you can view them online if you are online looking at your statements. And when we do our annual reviews with you, we always bring those numbers with us. So if you have any more questions about that, book values or net invested and so on, give us a call anytime. We'll be happy to help.